Hey everybody, it's been a while since I've done one of these, so I figured I would hop on. We're going to use AMC as an example and do some technical analysis tutorial stuff. I'm wearing my Stock God shirt, available on Etsy. So I just wanted to walk you through this. First of all, let me delete this so I can show you how to do it. Remove drawing. Okay. So here we are on a 180-day chart of AMC, and I'm going to show you all of the potential buying opportunities that we've had to swing trade or day trade the stock using a bunch of different techniques and tools. The first one being Fibonacci retracements. So this is TD Ameritrade's Think or Swim. What you do to draw a Fibonacci retracement is you connect the high to the low. So you can work this on any time frame, whether it be 1 day, 10-day, 5-day, 20-day, or even 180 days. I like to use a few, but the reason I like the 180-day is because it gives me the big picture. It shows me what's happening over a longer period of time. So if we connect, let's just do that. We right-click on the top, add drawing, and we go down to this little percentage tool, which will say Fibonacci retracements. We drag it all the way over here to this 191 low, and we click, and it drops these Fibonacci retracements. Now, I know a lot of people like to say, well, technical analysis doesn't work for AMC because it's being manipulated and whatever. Maybe that's the case. Maybe it's not the case. A lot of people like to say that technical analysis, because it doesn't work 100% of the time, is just bullshit. But, you know, nothing works 100% of the time. That's not the point. This isn't supposed to work 100% of the time. What it's supposed to do is give you indicators, potential price targets, that kind of thing. You know, red lights aren't 100% accurate. They're supposed to be. It's the law. You're supposed to stop at a red light, but sometimes people don't. Sometimes people are texting and they're not paying attention. Sometimes they're in a hurry and it goes from yellow to red and they think they can beat it. Sometimes they're drunk. Sometimes they just don't give a shit. So even red lights aren't 100% accurate. The point isn't that they're supposed to be 100%. The point is that they're supposed to give you ideas on where you can sell to take a loss or sell to take a profit. So this 61.8 level is a key indicator. It's called the golden ratio. This is this Fibonacci retracement, this math stuff. The way it works is if a stock is climbing up, and it's breaking through all these smaller resistance levels, and it crosses 61.8, that's a key indicator that the stock is bullish, that it's going to run. And as a result, in theory, it could get to this 100% level. Flip side is if it crosses this support line or resistance line, support line on the way down, then it's an indicator that it's going to be bearish, that there could be a big sell-off coming. Sure enough, we get that. The other thing we get, I wish I knew how to draw circles on this video, but you see this blue line right here? This is the 50-day moving average. And this yellow line is the 200-day moving average. And what happens, you might have heard a lot of people on TikTok talking about this lately. This is called the death cross. When the 50-day crosses the 200-day, you can see the cross right here. That is a bearish indicator. It's an indicator that the stock is going to go lower. And sure enough, it does. So a couple things we want to take note of. One, each one of these work as support or resistance depending on where the stock is going. On the way down, these are support levels. And what we want to see is we want to see the stock hang out around that support level. I know a lot of people take this very literally. And they go, it has to be exactly on the line. And if it goes even a little bit below, chill out. It's not meant to be like that literal. It's meant to be as an idea. It's supposed to kind of hang out around this level, right? So if it gets close, it's not a guarantee that it's going to get exactly to that exact price, right? $47.99, $39.09. The idea is that you get kind of close in ranges. So a stock can go above and below a little bit, above and below a little bit. It's just giving you an idea. So when it crosses below, we've got potential trouble. And then we're worried that it'll go even lower and even lower and even lower and even lower. If we see consolidation, that's a good sign at any level, right? Because it means the selling pressure has lessened. And then it really is just 50-50. Is it going to go higher? Is it going to go lower? Maybe, yes or no, right? 50-50. So one of the things that I like to do is I like to look down here at this guy is called the Relative Strength Index. And when the stock price crosses below this 30 line right here, it's considered that the stock is oversold. There's too much selling pressure, and based on historic past volatility and stuff like that, the stock will likely have a little bit of a rebound. Relative strength works on the big picture and the small picture as well. So what I like to do is I like to look at the big picture, and then I like to hop up over here and go to one of the more shorter time frame charts, 10-day, 20-day, 1 day, to get a gauge as to what's going on in the moment as well. But I just want to show you a couple of things here. See right here, as the stock is dropping, we cross, well actually before we cross, we bounce off of the support line. Now look, we might not hit it exactly, right? Where's the red candlestick? Looks like it ends somewhere around here at $40. So, you know, it doesn't get exactly to $39.09, but $40 is within, you know, it's within the range. So it's good enough to me. But when you scroll all the way down here, or you look all the way down here, you notice that it is oversold, and it's pretty heavily oversold as well. So this would be a potential buying opportunity. So I know people are going to go, well, yeah, no shit, it's hindsight, it's 2020, you're looking backwards into the, you know, you're looking backwards. Of course, this is the right time to buy. But this happens in real time, right? Look where we are right now. This is not a buying opportunity, but it looks like it's heading lower, and the stock looks like it might be selling back off a little bit, although it's up at the moment. You watch this in real time. This is a lot of what stock traders do. They just sit, and we watch, and we look, and it's boring. You can also right-click on any support line that we're trading in a range of. So we're trading in between $39.09 and $30.20 right now. You can right-click on this 38.2 Fibonacci retracement and hit Create Alert Withdrawing. It'll show you, hit Create. And now what's going to happen is, if you have the Thinkorswim app on your phone, which you definitely should, it'll alert you. Bing, your phone will go off. When it crosses this level, when it crosses this line, your phone will go off. You'll get an alert. If you're worried that it might not get to that level, right? You don't want to miss your opportunity. You can always go up a little bit higher. See this gray line right here? Well, I'm going to point with my finger like you can see my finger, but you can see it. This gray little line, how it moves up and down. You can go a little bit higher. You can right click, and you can create an alert right here. Oh, whoops, I did the wrong thing. That was the alert, by the way. Right click, create alert, at or above. That's why it dinged. Below, and now look, 3207, it'll create an alert. So a little bit above this retracement line. That's what I personally like to do, because I don't expect that. I'm not taking this literally, in other words. I don't expect that it will get exactly to $30.02 exactly on this line, but as it starts to get in that range, closer to it, that's where I set these levels. And I can just show you, because I did it by mistake, I set at above that level. Well, it already is above that level, but this is what it'll look like on your phone. Your alert went off. So I'll get an alert at 3207 as we're heading lower and lower. Once we start heading lower and lower, and my phone alerts me that we're at around $32 because I'm paying attention to that $30 range, now I start actively paying attention. But what I'm really looking for is this. In real time, I want to see us enter oversold territory again, because this is an opportunity for me to trade this stock. Let's just look at the last two examples, this one and this one. When we sell off, we're oversold. We're at around, what? Looks like we're at around $41. And where does it go? Almost the next day. Look at this big green candlestick. It goes right up to $49. So from 39-ish to 49. It's a $10 gain. just on this one oversold indicator. So you buy it when you notice the stock is entering oversold. Even if you buy it at 42 or 43, it still is oversold. So it's indicating that there's going to be some sort of rebound. If it doesn't happen, you need to be prepared to cut your losses. If it does happen, you need to be prepared to take your gains. Where might those gains be? In theory, right around here at our previous resistance level, because this is indicating that we're now going to be trading within this trading range. So for me, if I were to enter this stock, this trade, I might buy it, say, around the $41 level, right? I'm not being hyper literal. I'm not expecting, okay, 39.09 is exactly where I will buy it. I'm in the range. Okay, so I buy it at 42.03. Let's just say, because that's where the cursor landed. I buy it at 42.03. A day or two later, it pumps all the way up to $48, $49. Now, I'm not going to sell it exactly at $49. I might take my profit somewhere earlier. However, you also notice that the stock doesn't get oversold, or overbought, I mean, which is indicating that it might have more room to go, except that it doesn't. It crosses over this resistance line of $47.99, and then it immediately drops right back off. This is why, if you're going to be trading, you need to be prepared to take your gains really, really quickly. Also keeping in mind that this technical analysis isn't 100%. That's why I am such a big fan of, look, the technical analysis is great, but you need to have a goal. You need to have a price target in mind, or a monetary amount, or a percentage amount in mind. So let's just see. I'm going to pull up my percentage calculator app, and we'll see what the percentage is. So from 42.03 to, let's just say, it gets up to 49. It gets up to 49, but we're not going to take it at 49, right? Because our goal is to take some profits, not all. Let's just say we'll sell it at around 46.63. 46. Oops, look what I did. 46.63 is a 10.9% gain. And we can calculate it 46 point, what did I say? This is why I'm so bad at math, because I can't remember any of these numbers. 42.03 is what we purchased it at. It is a $4.60 gain on 100 shares, just 100 shares. That's $460. That's not bad for 2 days. So my goal on these short, wow, what happened? Don't look at my password. My goal on these very short-term trades is to usually pull in around $200 to $300. So I'm up $460. I'm out. I'm not going to hold on because I'm waiting for the analysis to tell me a certain thing. I'm out. That's my trade for the day or the week or whatever my goal is. I've surpassed my goal. If my goal is $200 per trade, I have surpassed it. I'm at $460. I'm out. Yes, it might run a little bit higher. Yes, it might cross this resistance line like it does and go all the way up to 79. But I had my goal. Now, if I'm watching it in real time and I notice, look, you can see down here, this volume is super weak. That's another indicator to me that this thing probably isn't going to keep running up to $79. The volume is weak. If the volume is really strong, like what we're seeing over here, where you can see the blue lines come all the way up here, maybe I take a quarter of my profits. I have 100 shares, so I sell 25. Maybe I sell half, and I go, hey, let's YOLO the rest and see what happens. Maybe it gets to 79. You've got options. It is all dependent to me on what all the analysis is saying, what the volume looks like. People neglect volume, but volume is really important. Technical analysis is great. Where's it going? But how much buying activity is there? Right here, there isn't very much. Okay, so now we can do it one more time because I'm going to keep this video brief. Look here. It gets oversold again. Around $31, right? Look, the line is $30.20. It might not get there. It might get to 31. It might get to 31.30, whatever. I'm going to start buying probably around here, around the 32s. Maybe the 31. Let's just do 31.81. Let me put it in my little percentage calculator so we can show you what kind of gain this would be. 31.81. It enters oversold down below in the relative strength. So I'm in at around 31.81, and the next day it pumps up to 38. But like I said, I usually get out a little earlier because I like to lock in my gains. So let's say I'm out at 37.43. That's a gain, oh, you can't see it, of 17%. That's pretty substantial. So what is it? 37 minus, let's just round up and say 32. It's a $5 gain. That's 500 bucks on my 100 shares. So I've got 500 bucks from this one over here. I've got 460 from over here. 500 from here. It's almost $1,000 in like, I don't know, maybe a week and a half. So that's how I use the Fibonacci retracements in coordination with volume, Bollinger Bands, all these other indicators. So anyway, I hope you thought this video was helpful. I hope you learned something. If you did, please hit that like, please hit that follow, please hit that subscribe, and if you feel like it, buy a Stock God t-shirt. Or not, I don't care. You do you. Have a good day. Thanks for watching.